All right, so we're going to talk a little bit about the differences between a tax certificate and a tax deed. They're very similar. So the process is that it goes to auction. From 3 years from then, we've got the administrative period. And basically, that is still a certificate. And after those 3 years, it turns to a deed. So the difference between those two is that really legal fees are covered and you're in a little bit better position because it's an actual deed and you've got a little bit more weight to throw around per se, is that you're able to kind of muscle yourself because it is a deed. During the certificate time, if they want to redeem, that can be done down at the county, and it's just a form, and we'll go more into detail on how that works. Where with a deed, they actually have to come to you to pay off the whole thing. Whereas if there's preservation improvements, there's stuff that goes on. So if they don't like the value that you give, they have to sue you or go away, and that carries a lot of weight for people that aren't interested in conflict or maybe realize that they've you know messed up and lost their house. So I would say the biggest difference with that is that if any legal bill that you have or any legal expense that you have to incur, that's covered. Or that when I say that's covered, if the person redeems, they have to pay your legal fees back. Where with a certificate, you are entitled to legal fees, but only if you start it on an injection. So if you're trying to kick somebody out, we'll talk more about ejections and quiet titles and all that good stuff. But it's either one with a deed. It's how it's redeemed. So either with a certificate, you've got administrative. With a deed, you've got judicial, and then legal fees on either side. You've got one avenue where you can get legal fees back. Whereas with a deed, it's pretty much any legal fee that you put in is covered. And again, that can be negotiated back and forth, but under the law, you're entitled to legal fees. So hopefully that helps explain the difference. Obviously, the difference being on a financial standpoint is with a certificate, it's much cheaper. It's cheaper to get into it. Obviously, there's a little bit more risk because you're paying only 1 to 3 years versus paying 3 to 5 years with a deed. So there's less cost with more risk, but there's a little bit more cost with a lesser risk there's a higher chance that everything that you ask for and everything that you do, you get a higher value for it. The preservation improvement wise, all the stuff combined, it allows you to have a little bit more, or be a little bit more aggressive with your angling. So hopefully that answered the question between a tax certificate and a tax deed.